Thank you for coming to my Monday night meeting for the question and answers. My name is Sally Gimmon, and I am the owner of the trustisyou.com and also a podcast called Stop Paying Capital Gains Now. I want to talk about the 4 different trusts that we deal with. I'm going to switch over to my slide deck, so give me 1 second to do this. So we're just going to get started. This is going to be about the business, the beneficial, the charitable, and the IRMA trusts. Just a little bit of slides on each one. Now, there are 2 major trusts. The 1099 income earners are for the business trust, and for investors, it's going to be the beneficial trust. I do break it up between the 2 because the majority of my clients either have one or the other. I personally do have both the business and the beneficial trusts, but trying to keep the price down for people. Now, either or, business trust or the beneficial trust, you're going to save 3 different ways. You're going to save federal taxes. Everybody wants to do that. You're going to keep all your information is going to be private. Well, I'll get into that in just a minute. This is a special non-grantor trust. So your LLCs, S corps, and C corps, those are statutory laws, different from each state, and you can do a Freedom of Information Act and get that information. And then number 3, you're going to pay no judgments if you get sued. I can't stop you from being sued, but you won't pay any judgments if you do get sued. Now, this trust came from England way back when King Henry VIII started the Church of England. He got in trouble for chopping off his wives' heads. He went to go tax the lords and ladies of England, and they went even further back into history, the Magna Carta. It has come over as contract law from England. The IRS Tax Code only got established here in the United States in 1913. It was supposed to be a 6-year plan because we were getting ready to go into World War I, and then the IRS Tax Code was supposed to go away. So the rich families, the Kennedys, the Rockefellers, the Bridgestone families, that they all decided that they were going to have this trust, and it is in the IRS Tax Code 643B, like Bravo. Not making fun of accountants. I'm dyslexic. I transpose numbers, but most accountants only work in the 300, 400 level. That's where 97% of all U.S. taxpayers are at. So they don't know about this all the way up in the 643B tax code. Now, all the trusts I'm going to talk about this evening, there's 4 different trusts. They are irrevocable, which means it goes from generation to generation. It's complex, which means it can hold money from day to day, week to week, month to month, year to year, decade to decade, generation to generation. Discretionary. The trustee can make the rules for the beneficiaries. I don't have any special rules for my family. The non-grantor. This makes this trust very, very private. 97% of all trusts sold in the United States are called family trusts. The only thing they're there for is to avoid going through probate when someone dies and they dissolve. They are done in the person's name. Grantor is the person's name and gives them no tax benefits. What a non-grantor trust does is you're going to find somebody who is not going to be a beneficiary. You will need their social security number. They're going to sign up for the trust and sign away from the trust. If you're having difficulty with this is not hard to do, but if you have difficulty, either I can do this for you or another representative at the law firm will do it for you free of charge. And then the spendthrift provision. This has gone in front of the U.S. Supreme Court twice. Both times the Supreme Court has honored in favor of this Spendthrift Trust. It is a contract law. The only way things could be changed is if Congress gets their act together and says, hey, my mom's from Ireland, so if St. Patrick's Day, March 17th, 2025, they're going to say no new trusts can be written. At that time, I'll just be doing my real estate and crypto investing, no more selling trusts, but they cannot go backwards, and it's a contract. They cannot break up a trust that's already been established. Now, the business trust. This is for anyone making 1099 income. The beneficial trust is for investors. The only salary that is not covered by either trust is going to be W-2 income. That that's going to be separate. I have teachers and I have nurses who have one or the other trust. What their salary is cannot be put through this trust. The business trust is for 1099 income earners. They're going to save at least 70%. I can say that legally, 70% on their federal taxes. A 1099 income person could be a real estate agent. I have a life insurance and P&C licenses. That's 1099 income. Selling weight loss supplies, brick and mortar store. I just helped the gentleman who has 2 pizzerias here in the Charlotte area. We're going to save him over $26,000 every single year. So in year 3, he's going to open up a 3rd location. In year 4, he's going to open up a 4th location. Or if you're doing affiliate marketing or online marketing, you're going to save federal taxes. Keep your information 100% private, and you'll pay no judgments if you get sued. Now, the beneficial trust, this is for any investor, passive investor, a real estate investor, crypto miner, stock market investing, options trading, day traders, forex traders, anything, royalties. You're going to save these taxes year after year after year, generation after generation after generation. Short term, but this is my story. I'll show you the slides in a few minutes. Long-term capital gains. I just helped today a gentleman sell his HVAC company. When you're selling a business, they're going to take what you paid for it to start with. He started in his kitchen table with his wife being the bookkeeper. So there was no startup cost, but he sold it for $1.7 million. He's now got 15 different trucks running out of that. He started the trust on July 8th. He started the trust. He just got paid yesterday. I got paid today he paid for the trust at $1.7 million at 15%. We saved him $255,000, or at 20%, we saved him $340,000 that would be due April 15th, 2024. He's 62, has bursitis of the knees. He's going to get on Social Security disability early. His wife is 59. The 2 of them are going to save so much in taxes. Now, this comes from the IRS tax tip 2003-29. This is really what the IRS says is a capital gain. Almost everything you own and use for personal purposes, pleasure, or investment is a capital asset. Talk about a broad statement. So this is why my podcast is called Stop Paying Capital Gains Now. Now, if you're a real estate investor, I am a real estate investor. You're going to save capital gains. You're going to save interest income and rental income. Capital gains is when you sell something. A year or less is between 10% to 37%, depending on your tax bracket. There's 7 different layers. Or a year or more, 15% or 20%. Interest income, I have 12 notes. Or if you do the BRRRR strategy, that's interest income. That again is going to be taxed between 10% to 37%. My personal tax rate before I started this trust was 24% tax rate. Rental income, I don't care if you have short-term, Airbnb, traveling nurses, or if you have long-term, 10 doors, 20 doors, or multifamily. Yes, you can take depreciation in the Spendthrift Trust, just like you do in your LLC, but you also must remember you're not going to pay any judgments if you get sued. So if you have a rental home, their dog gets loose and bites the mailman's going to come after the owner of the home, not the renter. They can sue you as an individual. You're worth nothing because everything's going to be in the trust, and that lawsuit will go away. Now, in real estate investing, there is a thing called the 1031 exchange. There is a very specific timeline. You have 45 days to find a third party, and then 160 days to find a like property for like property. If the Spendthrift Trust does away with the 1031 exchange and the timelines, and then also what will happen is if you start doing a 1031 exchange, you must continue doing that 1031 exchange from property to property to property. I've spoken to at least 10 adult children with incapacitated parents. Maybe they've had a stroke or something else, and all of a sudden they get a tax bill from the federal government. Mom and dad might have been doing a 1031 exchange back in the 90s or year 2000 or something else. And then they sold the property, didn't know it was a 1031 exchange, and all of a sudden they got a surprise tax bill. It must be paid. So again, with the beneficial spendthrift trust, does away with the need for a 1031 exchange. Now, this is, I started the trust in 2020. My Rocky Mount, North Carolina property, I bought July 20th, 2020. I put $20,000 down. It was going to go to auction for $50,000. The spread was going to be $30,000. I did nothing for it, not even lift a hammer. Fantastic. I knew that $30,000 at 24% capital gains, I'd be paying $7,100. Remember, July of 2020, middle of COVID, we didn't know how long it was going to go for. It took 13 months for that property to finally sell. August 28th, 2021, it went to auction for $64,329. I got to save $10,550 on that one property. Plus that Memphis, Tennessee, that was a note that stopped paying during COVID. We had to do a land deal with them. I was able to sell it. I saved an extra $3,712. So altogether, I've saved over $14,000. I'm sorry, $22,878. It's right in front of me, and I'm not even reading it. Now, this is up until July 31st, 2022. I moved to North Carolina because there's a thing called upset bids here in North Carolina. In 2022, I won 6 of these upset bids. This is only to July 31st, but Ottawa fix and flip. I got $78,242.05 in profit on that one. So I was able to save $18,777 on that. Monroe, North Carolina, that was a 2-bedroom, 1-bath house. I sold that. This Concord one that's only for $8,500. That was an EPA. It was a trailer with a hole in the roof and 2 holes on the floorboard. It had EPA regulations. I wholesaled the land. It was on 2.5 acres. I wholesaled it to a builder. He took care of the EPA, and I made an extra $8,500 on that deal. Fantastic. I also have a crypto bot where it's Ethereum versus Bitcoin. So every time it changes, I get paid. On average, I'm getting about $38.76 every single day. That has saved me over almost $1,400. I also stake persistence coin. I didn't do it in July because they're not paying 30% anymore, but I did it for more than a year, and I got to save an extra $576 in capital gains on that. Dividend income, day traders, and options. Your dividend income, if you're making a profit on your federal taxes, is going to be taxed between 10% to 37%, 7 different layers. If you're an options trader, short term, a year or less, you're going to be charged 40% on all your profits. If the option's more than a year, it'll be 60%. You'll be able to save that with this beneficial spendthrift trust. Now, forex investors. I have several forex investors who are not aware that they get taxed twice. You're going to get taxed interest income, that's between 10% to 37%, whatever your tax bracket is, and capital gains on any profits you make. You need this spendthrift trust because you're going to save that year after year, decade after decade, generation after generation. Now, royalties. This is kind of an interesting one. Royalties are authors, actors, musicians, playwrights, any NFTs, NFT artwork, NFT crypto, NFT real estate. One of my clients inherited his granddad's horse farm in Oklahoma. He has 6 oil wells on the property. The oil wells and mineral rights are royalties, and me selling this trust is a royalty. I have an NFT artist who is selling a series of pictures in the meta world. It's 1 through 100. She sells each picture for $1,000. Her first picture is considered 1099 income, but picture 2 through 100, That's a royalty. She's making $99,000 on each series she's done. So far for 2023, she has done 9 separate series. So she's saving a whole bunch of money in her federal taxes. Now, this is an interesting one. This is a charitable trust. We sell the charitable trust, and I am partnering with somebody to help them get Google ad grants. You have to do this correctly. I'm not the one who does it. My partner will do this for you. You will get $120,000 a year. So basically, Google is going to give you a grant of $329 a day or $10,000 a month to advertise your charity. So on my other website, www.learnwithsallymarie.com, where I'm helping people get out of debt for one-time $10 gift and 3 recruits. I'm using that as my charitable trust. I'm getting Google ads, the whole program that runs the Google ads. The leads come through there, and then it's called when you go out to learnwithsallymarie.com. It's a circle of wealth in 5 simple steps. Step 1 is 2 questions. Step 2 is gift giving tree. Step 3 is 3 online businesses. Step 4 is if you want to learn how to be a real estate investor, 11 classes. And step 5 is a trust. So all of this is symbiotic, working together, and I'm getting all free that, and I'm also apply for other grants too to teach people how to get out of debt. This 4th trust, this is a special trust for people who are over 65. This is a little bit scary because people don't talk about this. IRMA is income related adjustable amount of, and what's going to happen is in October of this year, October 2023, the IRS is going to go back to 2021 tax returns, people who checking all 1040 tax returns to see if someone who's on Social Security made more than $91,000. It's going to take everything from interest income, capital gains, dividend income, rental income, royalties. It's going to be your Social Security payments. It's going to be money from your pensions. It's going to be if you're making any doing anything online, maybe you have an online store or something like that. 401k withdrawals and IRA withdrawals. So that the IRS is looking at 2021 tax returns to see if you made more than $91,000. It's going to affect your Part B of Medicare. That's your doctors and tests. Right now, average Americans pay $166 a month from their Social Security check to pay for Part B. If you are making more than $91,000, you'll pay more for that Part B. If you're making more than $150,000, you'll start paying the federal government for Part B. Now, I don't care if you have the Retirement Spendthrift Trust, the Charitable Spendthrift Trust, the 1099, the Business Trust, or the Beneficial Trust. Whenever you file a tax return, you're going to file a 1041 tax return. The IRS does not check the 1041 tax returns because only very specialized situations you file a 1041 tax return. So you're going to avoid paying, working on the IRMA if you have too much money. I was a Medicare broker for 22 months. Most people getting on Medicare, turning 65, are broke, but there are some well-heeled people getting on Medicare. I want to make sure they're taken care of. Now, I do believe the 6 inches between your ears is the most important 6 inches that we all have. I would highly suggest you read these different books. Maybe you can do 1 a year. They say average Americans only read 1 book a year. The Power of Your Subconscious Mind. It's Joseph Murphy. It's an older book from 1930. What he has in there are some ideas which are a little bit older, but it makes sense. My great aunt Kitty in Ireland would always say, like, I need to sleep on this before I make a decision. She'd catnap and then give us her decision. So those are some books that I suggest you read. Now, I do this every Monday night, 8 p.m. East Coast time, because I want to teach as many people as possible to save money on their federal taxes. I found out how to do this. I want other people to find out how to do this. My podcast is Stop Paying Capital Gains Now with an exclamation mark. And then you can download the slides, a whole slide deck at thetrustisyou.com. So let me get out of here. Let me stop sharing. Let me stop recording. That would also help.